Let's start off with the central bank and the shilling. And this new law, they're acting very tough. They're putting in new forex trading rules, which makes it very hard for banks and for forex bureaus to have any activity that is not supported by some kind of commercial activity.
I think for central bank it's a case of once bitten, twice shy. After the slide of the shilling to 107 levels, that's trying to put in place mechanisms to ensure that there's no volatility in the shilling. But with regards to these rules, I think at this point in time, they'll need to ensure that they be more, they indulge the industry players much more, because the issue is that previously when they tried to put in similar mechanisms, there are elements of sabotage. Because at the end of the day, let's not forget that it's a capitalist economy. Banks are out to make money. At the end of each reporting period, they are compared against their peers in terms of their earnings. So these guys will look for any loopholes to ensure that they maximize from volatility as much as possible. So I think in regards to these rules, there are still proposals. I think the regulator, CBK, will have to ensure that they engage the players in the industry to ensure their successful implementation. But it will also be difficult, because looking at, as much as they're saying that should be backed by commercial activity, how do you define commercial activity? That is one. Secondly, banks also have their proprietary books, which they need to maximize on shareholder capital. So I think the element of definition, how will it be enforced?
So right now you're saying that the regulations appear to be a bit vague. It's not exactly clear what this means and how is it enforced.
Exactly, because it brings issues of, okay, fine, the rules are there, but then how will they ensure that it is implemented to the letter to ensure that they meet the objectives of the rules? And like I said, as opposed to the previous tactics where it's like forced down on the industry, at this point in time they need to move hand in hand with the industry.
You know, this reminds me of October last year when the shilling was at 107 and we were talking about arbitrage and what exactly is legal and did banks behave improperly, and therefore do they need to be penalized for that?
Yes, I think according to me, banks never behaved in any improper way. Because you see, it becomes now an issue of are we here to make money, or do we look at the morality of things? But at the end of the day, your shareholders won't judge you on whether you took a decision that impacted the market negatively, which is basically the objective of central bank, to ensure that there's some confidence, that you can easily be able to project how the shilling will move. But I think at that point in time, they basically slept on the job in terms of their regulatory role.
But is there a likelihood, and this is a perfect, it is a valid point, that the central bank puts in place these regulations because they feel a lot of times, fine, you don't want to be moralistic about it, you're a regulator of a financial market, but there's the times when people are just not playing by the rules.
Of course, definitely. I mean, ideally, even in life outside of banking, people want to test the limits. I mean, how far can we go? And you find even in the global settings, just because of loopholes in rules, that's how things like the financial meltdown came about. So basically what we are saying is that, fine, have the rules, but make sure that it's in an environment where it makes commercial sense, that it doesn't push down on these guys so much that they look for the loopholes in the rules to exploit.
All right, let's talk about the shilling's performance itself. So far staying stable largely because the central bank has been very aggressive in mopping up excess liquidity. What are you thinking about the currency?
Well, currently, the currency has been stable, will continue to be stable, especially on the back of central bank mopping up excess liquidity, but at the same time, in the recent days, they've been mopping up liquidity at the most cost-efficient way possible, in terms of not being too aggressive in taking up bids that are above, say, 10%. So what we are seeing is a situation whereby CBK is comfortable with where the shilling is, and that's why there was the cut in the CBR rate. But I think at this point in time, I'll mention that, as I've always said, that they'll need also to draw in on Treasury's role in terms of the fiscal side to ensure that they're addressing the current account deficit issues that impact or put pressure on the shilling.
And that leads me to the next question, which is that we're expecting these new fuel prices today. How do you think they're likely to play, considering what the shilling is and internationally internationally what crude prices are?
Well, I'm thinking there should be a rise. I rule out a rise in the prices. Probably it will be maintained or a slight drop. That's on the back of declining inflation, on the back of stable currency, and also on the back of the stable oil prices internationally.
So do you want to put a margin on that, maybe 2 shillings, 4 shillings?
I would put 2 shillings on the lower side.
I'm asking you to look into the crystal ball, and you're not very keen on it.
I think I'll be conservative and say probably a 2 shilling drop.
That is fair enough. Let's move on to something else. You don't deal too much in the equities market, but you can give me a quick perspective on this. We're seeing a lot more foreign local investors coming into the market, even as the index rising like yesterday it did. It's largely on local investors than foreigners.
Yes. Actually, you find that for a long period of time, foreigners dominated the market.
Yes.
For the simple reason that looking on a comparative analysis, the Kenyan market gave them very good returns.
Yes.
But now, you find that the locals are attracted, and mainly institutional investors, but this is on the backdrop of declining interest rates.
Yes.
And the economics of it is such that as rates were high, they're mainly parking cash in banks. Yeah.
Yes.
But as rates decline, they are getting attracted into the equities segment, and that's why they're putting more money into equities. And also for a long time, equities were highly undervalued. Yeah, so multiples are very attractive at the moment, but at the same time, you're finding companies reporting very strong earnings, which is attracting local investors into the market. So basically, that's why you're seeing the index performing as it is.